What's up, guys? So today is going to be a little bit different. So we're going to talk about the money aspect of the life insurance business. So one of the ways that I kind of do this, I follow the profit first model, and I kind of wanted to go through how that works and how it applies to insurance. Obviously, this won't apply to some people, but especially if you're really starting out, one of the hardest part is going to be getting your cash flow right, especially when you're buying leads. You got all these expenses and making sure that your bank account stays full and suddenly all your money's not just gone. Okay. So on here, we're going to do the profit first for insurance. So what is profit first? So profit first it was written by Mike Michalowicz. So basically it's designed to make your money into a cash flow machine. So the idea is you're going to designate your business. It's in 5 accounts. So basically what you're going to do is your real revenue account. So 100% of your money goes into there. There are no expenses in that account. So all the income will go into there. So all your carrier contracts, everything like that, that's all going to go into that real revenue account. So then you can see exactly how much money is coming into your business all the time. The next one is going to be your profit account. So your profit account, Brandon Carter calls it your baller account. That's your money that you can just do whatever you want with it, right? It doesn't need a purpose. If you want to go buy something stupid, you want to do it out of that profit account. So then you kind of don't feel guilty about spending money on stupid shit. I personally like spending money on stupid shit, so the profit account is really nice. It just allows you to not feel bad about making purchases like that. You've designated that money just to do that. The next one is going to be your owner's pay account. So basically what that one is, that's what you're going to live off of. So if it's not owner's pay, it would just be your living expenses account. So all that money, that's going to be a designated percentage, and that's going to be what you're just going to live off of. So you don't have to worry about that money. So that money, for me, I actually just cap it at a certain amount, and then after that, I just throw it back into the business. But on your owner's pay account, that's how you're going to designate your pay. The next one, you're just going to set aside money for taxes. Now on that one, basically, so then when tax comes, you're not sitting with your pants down, owing the government a lot of money. You already have that money set aside. And then if you do need to spend more money for write-offs or anything like that, you have that capital already to be utilized. So you don't have to worry about, if you do have to pay the taxes, you can pay it. Or if you want to buy a write-off or whatever you need to do, you have that money already there to go ahead and utilize that in order to bring that tax bill down. And then the final one is going to be your operating expenses. So for that one, that's going to be what we're going to run our business off of. So that's going to be our lead cost. That's going to be our chargebacks. That's going to be our software. That's going to be everything that you use in order to run your business. You're going to have it come out of that account. So then, especially when it comes tax time, when people ask, what are your business expenses? It's that whole account. So anything that goes to your business, that is going to go in there. So you automatically have all that money there and it's already ready to go. So the next one, so this is how it is originally put together. So can it be applied to insurance? Yes and no. I find that the operating expenses from the book is a little bit on the lower side, just because you need to have a lot more capital to be able to utilize in insurance. I know a lot of people bring you in this industry and they'll be like, hey, you spend $1 on a lead, you make $1,000. Well, you got to spend a lot of dollars to make that $1,000. So the operating expense, I find that it's just a little low. I probably manage that, but me personally, I just like having enough in that account that I don't have to worry about buying leads or anything like that. So I want to make sure that that account is going to be as large as possible. So when I go to purchase leads, I'm not sitting there like, oh, this is my last $1,000. I'm totally fine on that. So what that does is the percentage of the owner's pay ends up being a little bit lower on that end. But what that does, it does give you a little bit more comfort, especially when this is a high cash business. So, you're going to be spending a lot of money. You're going to be making a lot of money, but you do have to spend that money in order to make it. So, how do I use it? So these are the expenses and how I designate all of mine. So real revenue, obviously it's going to be 100% of all income will go into there. 5% will go into the profit account. Then I live off 30% of whatever that is. Then taxes, I'm going to have 15% of that just set aside so I don't have to worry about when it comes to tax time. And then finally, it's going to be 50% when it comes to the business expenses. Now, a little trick on your taxes, since obviously that money just sits, I would recommend putting it in a high yield savings account, just because if you can get 5% on that money, you're doing pretty well. So you can take that money and then you can get a little bit extra, so it hurts a little bit less when you got to pay the government. And yeah, the reason why you're just going to have a larger expense is we do have chargebacks and all that stuff. So that money's not all the time yours unless it sits there for a while. So having that extra capital that allows you to, if a chargeback does come up, you have that money to go get more leads and to actually make more sales in order to overcome that chargeback. Or if you did just want to pay that chargeback off, you could easily do that. So you're not kind of scrambling and you're not having to go into your owner pay, which we want to make sure we're eating properly and not eating ramen. So what are the pitfalls? The biggest pitfall, especially when I started, was I did this for a while and then I kind of failed. So I actually ran out of money. And so the hard part is, if you are low on cash, it can be hard to get this moving, right? Because if you get a $1,000 check and you need to spend that money, you're probably not going to have enough for the living expenses. So that gets pumped up to a certain amount. And this also assumes no credit, which in my opinion, if you're getting in this industry, unless you're running a super, super high level, right? 30, 40,000 IP a month, you really don't need to utilize credit. The only reason why, if it's that larger, right, you got a larger lead cost and you might as well be utilizing that in order to do that. Or if you did want to have your business expenses all on a card, you could do that. You just have to make sure that you do pay that off every single month. So just make sure that you do understand that. But this does work completely just with debit. You don't have to actually run a credit card. I know some people say, take out a credit card and do insurance. I don't think it's the best idea. Just because obviously at a certain level, go ahead once you have enough. But if you're really starting out, it can be a little bit tougher. So just kind of make sure that you do know that. That's how the profit first model works. I do think it's really helpful, especially when you're starting out, just because you're spending a lot of money. And being able to perform at that level, you have to be able to maintain your cash flow to be able to buy leads every single week. I know if used to, I would spend $500 a month in leads. I was not making as much money just because it's a lot harder in order for you to do that. So you have to be able to consistently buy leads to have new people to talk to. Or if you're generating your own, you have to have that capital in order to acquire more clients, so that you can keep doing this. And this is a way to where that money's always set aside. So you're just not stuck in a pinch of like food or leads, right? You already have that money designated. You have that money. So if you're running low on the business, wipe it, get it in, get more people, and then you're going to kind of go from. But that's how I use profit in my business. I hope you enjoyed this video. And if you have any questions about Profit First, just leave me a comment. Please like and subscribe. There'll be more videos like this. Let me know if you do like this type of video. Obviously, this is a little bit more in the financial side of insurance, but I do think there is kind of a lot of smoke and mirrors when a lot of people talk about this stuff. So this is how I run my business. Hopefully you found that helpful, and I'll talk to you guys next week.